Look, if you have any money at all in Nigeria, whether it's sitting in a bank, invested in the market, or just in your wallet, there are five incredibly powerful forces shaping its value every single day. And understanding them isn't just for economists. Trust me, you absolutely need to know about them to protect and grow your cash. So what are they? Think of the economy like a really complex machine. What we're going to do now is look at the five main gears that make the whole thing turn. And by the time we're done, you'll see exactly how the price of oil connects to the price of bread in your local shop, and more importantly, what it all means for your investment strategy.
So, where does it all begin? Well, it all starts with one thing: oil. You have to understand, for Nigeria, crude oil isn't just another commodity. It is the nation's primary paycheck. This one source of income is the engine that powers the entire system, and you feel its impact everywhere.
And just to show you how massive this is, look at this number. Somewhere between 80 and 90% of all the foreign currency, all the dollars that Nigeria earns, comes from selling oil. That means the country's entire financial health, its ability to import everything from medicine to machines, to pay its debts and to build roads, is all tied to the price of this one single thing.
And believe me, that price is a wild roller coaster. Just look at this timeline. Back in July 2008, prices were through the roof at nearly $150 a barrel. That fueled a huge economic boom. But then, boom, look what happens in early 2016. It crashes down to just $28. During the pandemic, it dropped below $20. Each of these dips sends massive shockwaves through the economy, creating some serious downturns.
So all this oil money is great, but how does it actually get into the economy? Well, it flows through this thing called FAC. That's the Federation Account Allocation Committee. The easiest way to think about it is like a giant pipeline that takes all that oil revenue and distributes it to the federal, state, and local governments every single month. But for years, there was this massive blockage in that pipeline. It was called the petrol subsidy. Now, this was a policy designed to keep fuel prices cheap for everybody. A nice idea, right? The problem was, at its peak, it was costing an estimated $10 billion a year. That's a huge amount of cash that wasn't going into things like roads or healthcare. So getting rid of it in 2023 was a massive and, yeah, very controversial turning point. So here's the bottom line. It's a direct chain of events. When the global price of oil changes, that directly changes how many dollars Nigeria earns. And that, in turn, decides how much money FAAC has to share with the government. Simply put, the price of oil dictates how much the government can spend. Okay, so the government is injecting all this money into the system. What happens next? Well, that has a direct impact on the money in your pocket, which leads us straight to our next two forces, and these two are tied at the hip: the constant threat of inflation and the ever-changing value of the naira. Let's talk about inflation first, which people often call the silent thief. And it's a good name for it. All it means is the rate at which your money is losing its power to buy stuff. So if your savings are earning less than the rate of inflation, well, you're actually getting poorer. And in Nigeria, that thief has been working overtime. I mean, inflation hit a staggering peak of 34.2% in September of 2024. A rate that high means your purchasing power gets cut in half in just about 2 years. It's a brutal erosion of wealth for pretty much everyone. And this slide? This shows you exactly what that feels like in the real world. You know, just a few years ago, 10,000 naira could get you a full basket of groceries for the week. Today, that same 10,000 naira barely covers a few essential items. That right there is inflation in action. Now, the other side of the story is the wild ride the naira itself has been on. Seriously, this chart right here, it might be one of the most important things you'll ever see as a Nigerian investor. In 1986, $1 cost about 10 naira. Fast forward to the end of 2024, and that same single dollar costs over 1,500 naira. That's just a mind-boggling depreciation. Which brings us to an absolutely critical rule of investing in Nigeria. Because of that insane long-term depreciation, you just can't measure your wealth or your investment returns in naira alone. It's only half the story. To get a real, honest look at how you're doing, you have to look at your performance through a dollar lens, too. That's not being negative, it's just being smart. So you've got inflation running wild, and the naira is under serious pressure. Who's supposed to step in and fix this mess?
Well, that brings us to our next major force, the central bank. And its most powerful weapon for controlling the cost of money, the interest rate. To fight back against that crippling inflation, the Central Bank of Nigeria had to get really aggressive. It started cranking up its main interest rate, what they call the monetary policy rate, or MPR, to over 26% by the middle of 2024. This rate is basically the benchmark for the cost of money for the entire economy. So this puts you, the investor, in a really interesting spot. Think about it. When you can get a super high, pretty safe return from just buying government bonds, why would you take on the risk of the stock market? Stocks have to promise much, much higher returns to even get your attention. But when interest rates are low, the opposite happens, and suddenly the stock market looks a whole lot more attractive.
All right, we've looked at all the pieces of the puzzle. The oil engine, the naira's value, inflation, and interest rates. But now for the most important part. Let's put it all together and see the big picture of how they work as one single interlocking system.
And here it is, the aha moment. It all kicks off with oil prices. That determines the national income. That income then flows through FAC as government spending. That spending, combined with the exchange rate, affects prices right here at home. We measure that change in prices as inflation. And finally, the central bank sees that inflation number and responds by changing interest rates, which brings us right back to you and your money. See how it's all connected?
So what's the big takeaway here? It's simple. You have to start with the big picture. Before you even think about analyzing a single company's stock, you first have to understand this macroeconomic foundation. Knowing where we are in this big economic cycle gives you the context you need to make way smarter financial decisions. So there you have it. You now have the framework. You understand the 5 big forces that are driving the Nigerian economy. So the real question is, now that you know what to look for, which of these forces are you going to watch most closely to guide your next move?